So I'm just going to start marking out from this profile. So either one of these two weekly profiles, doesn't really matter. It's taking a Wednesday high view on price, and the big difference is that Tuesday created some form of a low before Wednesday created a high. So on this Monday range, high to low, price spiked below Monday's low, so now automatically it can't be a Monday low, but it's not a Tuesday reversal. So that spike in price pushes up, and we have Wednesday's high and low, which we'll use later. So this is the CPI BISI, and from that CPI BISI we're going to frame out Thursday. So we're expecting Wednesday's high to stay protected. So as we go down on the 5-minute chart, what we have is Wednesday's high with this order block from the spike high down to the body. You can see even just the bodies alone, price comes into the very top, wicks it, and then rejects. So with that rejection, that's where we get the initiation of the AM decline. So this AM decline runs, and let's mark out exactly how the AM session looks. So we take our AM session and we've got our high to low. We see our 9:30 opening price, very important here. This is a fair value gap on the 1 minute, and we've got our AM low here. On a 1 minute time frame, here would be your fair value gap entry, and we start making our move down. Now you'll notice the move is fairly choppy. I mean, when you look at this, it's like a lot of liquidity just being formed here. Then we have a consolidation. Now the thing about the bond auction is once we got to the price range for lunch, there's a rule for bond auction that's going to be very different. So typically, let's look at it from the inverse to begin. So typically lunch is 12 to 1, but on this day we actually have a bond auction event. So the bond auction rule is simply looking at the time of the bond auction, which on this day was 101, and framing what liquidity will the bond auction need. So let's do first what we call the standard play, and what we see is price runs down, dips into the 50% of that CPI BISI. So that's here. So in lunch we're dipping down, and then we're coming out. We're waiting until after lunch because we're not trading the lunch hour. That's our high, that's our low. And we also recognize that we're waiting for 101 for that price candle to shift. Once price breaks above the lunch high, and we're using time-based range rules here, so price will either reject a range, create a retracement, go for the lower end of the range, model 2022 rules, or price is going to break the high, return to the top of the range, and then go higher. So the intraday profile at play here is an AM decline, PM rally. So let's throw that on the chart. AM decline, PM rally on a 101 news. So what we're expecting on an AM decline PM rally is for the AM low to be taken. So that's true, AM low was taken, but let's pay attention to the times here. So if this is our lunch time, and let's just put that up here. So if this is our lunch hour, standard lunch rules, we already see whether or not we're able to capitalize on this. We're looking to see what's the continuation, what's the follow through for the PM. We're expecting the lunch high and low to be taken, one first, the other one second. So the lunch low to be taken first, including the AM low, and then the lunch high to be taken. Now we may not get back to the AM high, but we are expecting price to come back around 930. So here's that 930 price. This hash mark is the opening price in the AM. We're expecting a little bit of a run up, then a decline. Then we'll look for the lunch price action to take the low right after lunch in this blue box, and then rally. So it's taking sell side liquidity and then rallying and coming back to the 930 price. So we see that it happens. It comes back to the 930 price just like we would expect, but it doesn't do the after lunch activity like we wanted. Right after lunch, we're expecting a low. We're expecting a low after lunch to sweep and then return. Instead, what we see is the lunch price action comes down to the BC and then go higher. Well, here's where we introduce the bond auction protocol. So the bond auction protocol is still using a time-based range, but we're going to tie in the concept that the market is going to need liquidity, something to base itself on. So what we're going to do is we're going to look at this lunch hour and we're going to make one small change. We're going to move the lunch hour to 11 to 12. And we need to move it 11 to 12 because the bond auction is going to work off of the hour that came before it. Now instantly you can see with our lunch range high and low moved, we start to see the profile becoming a lot more precise. So here's our lunch high and low. We have our AM low. We now see that price takes a dip after lunch. So again, the idea here is that the lunch macro is shifting. So we're moving the lunch 1 hour back because we need, or the bond auction needs, the liquidity from a lunch range. It needs a time-based range to hit its liquidity. And what we now see is that this matches up perfectly. Price will dip below the low and then make a rally, dip below the low, AM low and lunch low, make a rally and go back to 930. Now we're overall in a bearish market because price failed to take the dotted line here. When price ran into that order block, we shifted price lower. So this is going to be a high resistance run, but that's fine. High resistance runs are still profitable. So where do we enter? Well, once price comes back above the lunch high and the the lunch low and the AM low, then we can see we have a very simple fair value gap. Fair value gap gets tagged and we are positioned before the 1 o'clock 101 bond auction. So this is a bond auction protocol. We're framing it on a higher time frame bias, which is to run down into 50% of the BC. 50% of the BC gets tagged. We shift back above the time-based range, AM low and lunch low on a bond auction protocol, shifting the lunch macro. Once price creates a fair value gap, we enter on the fair value gap. Price runs higher, confirms the bullish price action, tags the top of that BC, shifts one more time above these relative equal highs, leaves another fair value gap. And where are we aiming for? We're aiming for 930. Now we know that this price action is going to create a high just below 930 and potentially it's going to go lower or higher. So when price gets close to 930, so this is that high just before based on time of day. No surprise, it is 3 o'clock hour in the power hour, which lines up perfectly with the intraday profile. Then we can either close the position or we're holding for that 930 price. But we are in a bearish market. So we're not looking for the AM high to get run out. We're not looking for forever prices. We're looking for 930. If price were to run this high, it would be a totally different weekly profile. So bond auction protocol. This is something I use every bond auction, save and accept the bond auction with CPI. So let's look at it, because this week we actually had a very cool situation where we had bond auction twice. So bond auction, which typically happens, is normally twice. So here's bond auction on Tuesday. Here's a news event, bond auction Tuesday the 11th. So let's look in at Tuesday. So here's Tuesday's price, where we dipped below Monday's low. That's the gray box, gray line. And what we're aiming for is to see how does this bond auction protocol play out on Tuesday. So same principle, we're gonna take first look at it from 12 to 1. Just understand what's happening here and why it's important to move the lunch hour. So 930's opening price is here. This is now an AM rally to a PM rally, so it's a 2-session up close. So let's find our 2-session up close protocol. Let's put that up on the chart. That 2-session up close is going to require in lunch the low of lunch. So we'll make a low in lunch, then we'll take the high, and then we're going to run but never come to the low. So let me draw the liquidity here. So this low will stay defended, and then we will see a shift where we'll take the high, defend the low, and then run higher. So we're looking for that in lunch. So if lunch is 12 to 1, what we would expect to see is a lunch low taken. So we're looking for that lunch low taken, the lunch high taken, and then our return. So there you go. We'd be looking for that. We see that price stays defended, and then we would be able to enter on this bullish run right up here. Great trade, great entry, and we're looking for higher prices into the close, 2-session up close. Bonus tip here too is if this is a 2-stage move, so this is going to take some form of liquidity and then shift. So whenever you see price taking liquidity, you just wait for the market structure shift and you can enter on price running up. But let's get back to the meat. The lunch macro shifts on the bond auction protocol, and let's see how much easier this price action is reflected when we simply shift the lunch hour back. So instead of 12 to 1, we're going to look at 11 to 12. We move our high and low. Immediately you can see we take the liquidity on the low, then we run the high, and we can have easy entries coming into all of this price action. So a couple of quick entries here. First off, once that price action shift happens here, this is a wick that takes a wick. So 50% is the sweet spot. So let's just put this correctly. So that's a really good entry here. We also have a breaker. So as price shifts off of this price action here, could have used the breaker, or even tighter on the 1 minute. You can see how this price action here, price taking the sell side, one sell side taken, market structure shift. We have everything down in this price action for this order block. So several errors that you can take, whether it's 50% of the wick, which is the svelte one, the breakout, which is from way back here, or you're taking this price action here on this order block. Everything is aligned, and it makes it a lot easier when you move that lunch macro to see that liquidity take, that shift, and then you're off to the races for higher prices. So again, bond auction protocol is very simple. All we're doing is we're shifting the lunch macro. We're shifting it back 1 hour, and the idea, the principle is that the auction price action needs to reference the lunch range liquidity. So 12 to 1 is just too close. It's too close to the actual event. You can get a much better entry if you simply shift the lunch hour back specifically on these days, and then use all the same range rules to apply. All right, that's it for this one.